Welcome to Cambridge House Live. I'm Bridget Anderson. I am joined by Mickey Fulp, known as the Mercenary Geologist and also the founder of mercenarygeologist.com. Thanks for being here.
Well, thanks for having me, Bridget.
Let's get your read on the junior mining sector here in British Columbia. How do you think they're doing and what do you think the opportunities are right now?
Right now, they're recovering. We had a horrible tax loss season. Probably rivals the one we had in 2008 during the financial crash. So valuations went way down in December. But to me, those were buying opportunities. I'm a bit of a contrarian. So what we had, tax loss selling, and I did significant tax loss selling in December. But what I did at the same time, I bought fundamentally strong companies with the money generated, and since the first of the year we've seen better valuations, and I am cautiously optimistic for the short term and probably more optimistic for the midterm of the junior explorers in the resource sector.
So how do you evaluate companies then?
I evaluate companies with three key criteria: share structure, people, and projects. So it has to be a combination of the right stew, if you will, of all those ingredients for it to work for me. I'm very particular about the companies that I cover. I cover currently 9 companies. I have a self-imposed limit of 10. The other key part of it is undervalue. So perhaps 10% of the companies on the exchange will meet my criteria at any one time, 5 to 10%. So let's say there's 1,750 juniors. I can eliminate somewhere, pare that down to somewhere around 100 at any one time. Then I go look for the ones that are undervalued with respect to their peers to get the ones that I want to cover at that particular time, because I have a business model of sell half when it doubles and then you're playing with somebody else's money. So the key criteria, pick them when they're undervalued, when they're low volumes, low prices, because every junior will double in any 52-week running period. So you pick them low and you sell them when they become wanted. It's an infallible way to make money in this market. You take all your money off the table when they double, and then I'm playing with somebody else's money, house money, or perhaps your money by that period of time.
Why do you have a self-imposed limit of 10?
Pardon?
Why do you have a self-imposed limit of 10 companies?
That's all I can cover. You know, it's my business, and I have some very key people who work for me on a part-time basis, my webmaster, editor, personal assistant, etc. But really, my business is based on the unholy trinity of me, myself, and I've realized that I can only cover 10 companies and cover them well. I run a free subscription newsletter, and my money is generated by the companies I cover who sponsor my website. So being my sponsors and they're putting bucks in my pocket, I got to make sure I'm doing a good job for them, and also that they're doing a good job for me and my subscribers by increasing their market valuation.
All right, so let's drill down a little bit, Mickey, and talk commodities. We'll start with gold. A lot of talk about gold, and there's going to be lots more comments in the next day or two about gold. Where do you see gold right now? Do you think that there's still lots more room for growth in 2012 and beyond?
I would say, and this is kind of a no-brainer because it's occurred over the last 12 years running, that by the end of this year, the gold price will be higher than it finished at the end of 2011. That said, I am not a gold bug. I have never been a gold bug. I'm just bullish on the long-term prospects on gold because of devaluation of every fiat currency in the world. And it's a race to devalue currencies. So gold is the only commodity or monetary instrument, if you will, that retains its purchasing power. So I would expect gold to be higher at the end of this year. I am very comfortable right now with a $1,650 gold price.
Okay, let's talk copper then, because there is a lot of discussion about where Asia is going, how the demand is, whether we're seeing some weakening economic data out of China particularly. When you look at the demand for something like copper, which is needed for so many infrastructure projects, where do you see copper growing, and how does the demand out of Asia fit into that for you?
Well, I am bullish in the near term on copper, and I've just recently turned bullish. I'm working on a piece which will be out this week. It's called Copper Continues to Confound the Commodities Crowd, because it's done it's had some behavior over the course of the year which is not usual in the case that inventories rose with a rising price of copper, and then inventories started to fall and copper price fell. Well, that does not meet common supply-demand fundamentals. China growth is slowing, but China continued to grow at 9% in the fourth quarter. We are in a lull right now. The Chinese Lunar New Year happens next week, I think. So we saw strong canceled warrants coming out of the warehouse, which means that's copper that is been in surplus and it's moving out right now, and that's before the Chinese New Year. So I think we'll see demand pick up after the Chinese New Year. So in the short term, I am very bullish on copper, and I am a secular bull in all commodities, basically driven by the middle classes of India and China, or the big countries, if you will, wanting to join us in our luxury items, or what they consider luxury items. And 40% of the world still doesn't have electricity, and you got to have a lot of copper to build the infrastructure for that.
Well, given your viewpoint, I imagine that you're pretty bullish on oil and gas then for North America as well.
Well, I'll separate those, and
Okay.
I'll tell you I'm very bullish on oil. Oil prices are right around $100 right now. Very comfortable with that. We see a supply-demand balance in oil. I think that will continue. We will still have robust demand for oil. Gas is a completely different thing. Natural gas in North America, we found too much with horizontal drilling and hydrofracking and new technologies. We do not have the infrastructure to support the gas that's available. So in the short term, I'm very bearish on natural gas. In fact, I'm making the rounds, and tomorrow I give a talk. What's up or down with the natural gas market? Well, very little is up. Henry Hub price at $2.36. People cannot make money. Gas producers cannot make money at $2.30 gas.
Unless that infrastructure gets to be in play in North America.
Right. And the problem we have in North America, especially in the United States, and I'm American, and so I speak from that viewpoint, we don't have the pipelines, the processing plants, or the storage capacity near gas fields, and that has put a bottleneck on our use of natural gas. U.S. could be self-sufficient in energy with nuclear and natural gas. We have the means to do it. We have the goal in mind. I don't think we have the will in the United States, basically because of environmental opposition.
Because of the concerns around fracking and what it's doing environmentally, concerns about the chemicals used and that kind of thing. Is that something, do you think, can be overcome?
I think it can be overcome with education of people, because it's really a relatively safe technology. You have to protect aquifers above and below. The oil and gas business has been doing this for a number of years, but it's not only the hydrofracking environmental opposition, but building a gas plant, a separation plant, simple thing to do, or converting coal-fired electrical plants to natural gas. That's a logical thing to do, but it takes infrastructure, it takes capital, and just about everything that's being proposed in the United States will attract the NIMBY and the banana crowd. We all know what a NIMBY is. Bananas build absolute nothing anywhere near anything. It will attract that NGO opposition because those groups are very well funded. It's all about money, in my opinion.
Well, there's lots more to discuss on that issue, I'm sure. Thanks very much for joining me, Mickey.
Okay, thank you very much, Bridget.